But my absolute favorite trading book is Reminiscences of a Stock Operator. It's about Jesse Livermore, one of the greatest traders ever lived. Joe Fahmy posted yesterday Jesse Livermore's trading rules. I'm gonna go through them. These are the exact same things I'm trying to teach you. Like, there's nothing new under the sun. Like, the same things still apply. It's really not rocket science or anything revolutionary I'm trying to teach you guys. It's just basic, simple stuff. Let's go through his rules. Here, look at this. Nothing new ever occurs in the business of speculating or investing in securities and commodities. Except it's the same thing. It's human nature. The same things over and over again. The only things that change are the companies and the people and the products. The same things over and over again. Here, money cannot consistently be made by trading every day or every week during the year. Absolutely. You gotta wait for those setups. You can't be trading every day. Don't trust your own opinion and back your judgment until the action of the market itself confirms your opinion. Another thing, your opinions are shit. And the less money in your trading accounts, the more shit your opinions are. I'm sorry, but that's just the truth. Opinions don't matter. You have to trade price action. Markets are never wrong. Opinions often are. Yes. I've experienced it too many times in my life. Every year I'm, trading less on my opinion and more on price action. The real money made in speculating has been in commitments showing profit right from the start. That's also my observation. Usually when you buy a stock and it just keeps going straight up, those are usually the best ones. You don't want the stock to pull back. You want it to go up. As long as the stock is acting right and the market is right, do not be in a hurry to take profits. I agree. That's why you need to be using a trailing stop. Like, for example, the 10-day moving average. Because you never know how high a stock can go from entry. Like, for example, look at NVAX. This one I fucked up. I thought this thing was done in low 80s. I sold all of my position. I bought it here on this 5-star setup. It ran up, 60, 70% in 2 weeks? I was like, hey, it's not gonna go higher. And after I sold it, it went up another 130%. And it never closed below the 10-day. You would have gotten stopped out here if you bought it here. If you had followed the rules, which I didn't because I'm an idiot. I had an opinion, and my opinion was shit. I should have just stuck to the rules. Okay, next one. One should never permit speculative ventures to run into investments. Yes, you should obey your stops. If you get stopped out, you get stopped out. You don't start rationalizing stuff. Oh, but it's because of this, it's because of that, oh, it will come back. No. If you get stopped out, you stop yourself out. No second guessing. The money lost by speculation alone is small compared with the gigantic sums lost by so-called investors who have let their investments ride. Yes. Well, this is kind of like this again. This is written after the Great Depression. These rules, obviously, a lot of people lost all of their everything in the markets. Because the markets went down 90% from 29 to 32. That's kind of extreme, but that's... So he kind of didn't believe in buy and hold investing. That's what it means. Never buy a stock because it has had a big decline from its previous high. Yes. Just because, a stock has, gone down a lot doesn't make it cheap. You shouldn't just randomly dip buy stuff. Only on good setups. You can buy a stock that has gone down, but only if you get a good setup. Never sell a stock because it seems high priced. Yeah, valuation, use trailing stops. Valuations don't matter in momentum trading, and it's short to intermediate term swing trading. Like Jesse Livermore, he was like a swing trader, or a position trader. He held for in the beginning, he was more like a day trader, and short-term swing trader. And as he became better and his account started to grow, he became like, holding stuff for months and quarters. And he traded breakouts. We had a breakout system, and he was at one point one of the richest men in the United States. Not bad for a swing trader, right? That was back in the like 20s, 30s. I become a buyer as soon as the stock market makes a new high on its movement after having a normal reaction. So what does that mean? Normal reaction is pretty much a pullback in a rising trend. And then he buys the breakout to new highs. Never average losses. Okay? If you buy something and it goes down, you don't buy more. Okay? You don't average down. Or if you short something and it keeps going higher. That's what averaging losses means. You only add to winners. The human side of every person is the greatest enemy of the average investor speculation. Yes. Like, you need to have a specific method or strategy. You can't let emotion dictate your trading or investing. You need to have a specific rule set. You will never get rid of emotions. Emotions are always gonna be there, and that's fine. But you can't let your emotions dictate what you're gonna do. Wishful thinking must be banished. You have to follow price. Big movements take time to develop. This is what I realized back in 2012, about 2013, 2014, a couple of years after I started trading. Like, I just looked at a bunch of charts. I'm like, wait, so let's say I day traded some stock, let's say I day traded something like Fastly, or, this is just hypothetical example. I'm looking at the chart a couple of months later and I'm like, wait, what? The stock is up 100 or 200%. I'm like, wait, why did I have to day trade it if I just held it, right? So I realized I had to, find a method or system to trade stocks and hold them for longer, because, big moves don't usually happen in a day. They take weeks and months to develop. So that's when I started researching swing trading. I found StockB, which is a very good swing trading site. And I am very thankful I realized it early. I'm like, why am I day trading for tiny moves when you can, hold for longer and get big moves? It's not good to be too curious about all the reasons behind price movements. Yes. Usually what you think is moving a stock, it may not be that thing moving the stock, no matter what media says or anyone says. Like, we always try to rationalize movements. Oh, it's Trump. Oh, it's China. Oh, it's this. Oh, it's that. Boo-hoo. There's always something you think are moving the stock, but, it may not be. At the end of the day, it's all supply and demand. It's a simple supply and demand. Sometimes stocks go up on good news, go down on bad news, but sometimes they go down on down on good news and up on bad news. There's no point in trying to overthink things. It's much easier to watch a few than many. Yes. Better to focus on the best setups than having if you have like five-star setups, which is like an extreme scenario, there's no reason to even watch any 4-star setups if there are several 4-star setups too. But if there are no 5-star setups, then you can just watch the 4-star setups. But there's no point in watching any 3-star setups. It's all about, focusing on a few of the best. If you cannot make money out of the leading active issues, you're not going to make money out of the stock market as a whole. If you can't make money on the momentum leaders, you're not going to make money out of the stock market as a whole. This is why you focus on the momentum leaders. The leaders of today may not be the leaders of 2 years from now. Yes, the leaders are constantly changing. Very few stocks remain leaders for several years in a row. There are some extreme examples, but usually most stocks are maybe leaders for a year or two, and then they they won't ever be a leader again. Do not become completely bearish or bullish on the whole market because one stock in some particular group has plainly reversed cruise from the general trend. So don't base your market analysis on just one stock. You gotta look at like the big picture. What are most stocks doing? Or like most of the like leaders. What are the other leaders doing? Like if one leader starts acting as shit, doesn't mean like the whole market is bad. Few people make money on tips. Beware of inside information. If there was easy money lying around, no one would be forcing it into your pocket. Exactly. Like, you know, I'm sorry, but that smart friend of yours who's really bullish on some random company, like, you know, he probably has no idea what the hell he's doing. I'm sorry, it's just the way it is. Unless he's like, you know, made a lot of money over, you know, like a long time period and he actually knows what the hell he's talking about. But, you know, your friend who has this hot stock tip, you know, you should probably run the other way. All right, that's that. Jesse Livermore's trading rules. I agree with every single one of them. Like it's like this guy was still living and wrote down those rules yesterday. That's how how accurate they are. No one wants to be Livermore. Like he had psychological problems. Like he had depression and stuff like that. He wasn't emotionally stable, but his trading rules are timeless. There's so many lessons to learn from him. And the problem is he blew up several times because he didn't follow his own rules. You know, you gotta follow the rules. Doesn't matter who you are, doesn't matter how much money you made. You don't follow the rules, you're gonna get into trouble.